Hey everybody, Drew Maconachy here on Legacy Wealth Academy to discuss asset protection and estate protection. So how did I get into this space, right? That's the key question. I jumped out of school and I was refinancing large properties in Los Angeles. I always wanted to be in real estate, so I thought growing up. My family's been in the asset protection business. My dad ran my business before I took it over. My uncle runs an insurance company. My sister's a reinsurance broker. So I've sort of been around this business my entire life, and I wanted to, as a 22-year-old, wanted to try something different. So I took a job straight out of school in Los Angeles, trying to refinance 100 million plus skyscrapers in Los Angeles. All that sounds great. The problem was my timing. This was in May of 2007. So all my real estate investors here are going to understand that was really, really bad timing. And the company that I went to work for, again, for all you real estate investors, was Countrywide Financial, which was the first kind of leg that brought down the financial system at that time. So we were doing loans up to 110% loan to value, just absolutely crazy stuff. We had the pen from Countrywide, meaning we could originate our own loans essentially without any sort of oversight. And within 3 weeks of taking that job, Countrywide shut down their book, meaning they stopped originating loans, and they started to attempt to unwind the bad debt that they had on their books. So needless to say, as a guy who was only getting paid for originating new loans, I was gonna need to find something new to do. So I went and again, talked to my network. My sister, who I had mentioned before, she was in the in the reinsurance business. She connected me with a friend of hers in HR at AIG, which is one of the largest insurance companies in the world. So I did at the time it was kind of a new thing. We did online interviews because I didn't want to live in LA. LA was just a kind of a stopgap to get me back to the Midwest or the East Coast. So the job was in Chicago, which is where I actually wanted to be. So I did this online interview, and within 2 days, I now had a job in Chicago, and I had to jump on a plane to start my training process there to get in insurance. Been there ever since. Now, those of you who, again, are following this story, this is 2007 AIG. In 2009, AIG was the first big insurance company that had to be saved. So I go from essentially killing the real estate market to essentially killing the insurance business. That's how my career started. So it was a heck of a start, tumultuous times. It gave me a lot of gray hairs as a 25-year-old at this time, but I left AIG after 2 years to get into pursue kind of my passion, which is working with clients directly to help them protect their assets, protect their families, protect their estates. And since then, since 2000, let's think about this, that was 2010-ish, I've sold over $100 million of insurance to clients across the country. 4 years after I switched and worked for that large brokerage, I came back to work for our family business. So that was in 2013-ish. And have been in Northeast Ohio since then. We've got 3 offices here, but like I said, we insure clients across the country, helping them with whatever they need. So I like to think of myself as an open book. I like to have conversations with my clients. I like to work through tough topics that don't necessarily have a definitive answer, and I kind of like to be a sounding board to work through tougher topics and help them stay on path, right? What I tell people is, I'm not here to help you grow. I am here to protect you from going backwards. So you work on the growth. Probably some other people in the Legacy Wealth Academy will be able to help you with a growth side. But as you grow and get to a new level, I create a stopping point here so that you can't go below your highest growth point, and then you grow up, I stop you here. And we'll go through 3 different ways that I can do that. The first of which is going to be personal asset protection, which we'll jump into now.